after that, we have monetary. Policy. Different, the opposite of fiscal policy. So we said fiscal policy was the president who runs it, or the politician. This time it's the central bank's business. Right? It's their job. And again, they have a couple of tools. First of all, monetary for money. They control the flow of money. So a central bank can control the supply of money. What else? Well, they can affect interest rates. Right. So if they pump more money into the economy will be better, will expand. If they take out money from the economy in circulation, the economy will shrink. And it's the same with interest rates. Interest rates makes money, right? Money has a price, which is interest, more expensive or cheaper, depending if you increase interest rate or reduce interest rate. If you reduce interest rates, let's show it here. Interest rates go down, money is cheaper. So the economy is going up because people invest, because money is available to invest in things. When you make interest rates higher, it's more expensive. The interest rate on a loan is more expensive, so you don't invest anymore. It's too expensive. A couple of other things to mention. A central bank is worried about inflation. That is their main concern. And all of the central banks around the world, they are trying to have an inflation of around 2%. As you know, currently we have interest rates way too high around the world, and this is a big issue. Now, this is not really a topic for this exam, but it's good to understand, because when you're faced with a question, you may be able to answer it better. So that's what the central banks are trying to do, to reduce inflation to around 2%. Not too low, not below that, and not above that. Now, if we look at the different central banks around the world, we have the Fed, or Federal Reserve. This is in the US. You have the ECB, which is the European Central Bank in Europe. You have the BOJ, which is the Bank of Japan. You have the BOE, which is the Bank of England. You have the PBOC, the People's Bank of China, and basically every country has its own. And what each one of these do, they control the actual currency of each. Right? I'm not sure how you do the sign for the Chinese renminbi, so I'll just skip it.